Good afternoon, everyone. Welcome to my gold and silver update. I'm JR, and we're looking at the gold market, the silver market, the Dow Jones, and the US dollar. A lot of really nice formations on a lot of these charts. If we look back here on the gold market, we can see that back here, right, back in 1981, we saw a high. We had an established high of 850, 8.5. We traded sideways for probably about, some 1983 to probably about 2005. So roughly 20 years traded sideways. Remember, the longer time frame you trade sideways, the bigger the breakout in whichever direction the market finds reasonable, right? So if we're trading sideways and we break to the upside, you're going to see a big move to the upside. And if we're obviously trading sideways and it breaks down, then you're going to see a big move to the downside, okay? With that said, very similar formation here. So you can see that back here, back from 1981, you had that established resistance at 1850. We broke above 1850, went up to 1,000, came back down, tested support, roughly nested here. Nice size area of support, by the way, right? A pretty decent size area of support, but an area nonetheless. Finds the buyers, and then the market immediately starts creating higher highs and higher lows, which is your definition of a bull market, right? Highs, right? And lows, right? So there's that move, right? And then the move ended up going to 19 and almost a quarter, right? And now we have the same situation. Maybe not a 20-year hiatus like we did back in 83, but relatively a long period of time. I would say from the May 2013 all the way up to August of 2019. So you're looking at roughly 6 years sideways action before the market broke out. We were anticipating this move here. We finally got it, and we could assume that the market was going to go much higher. Again, the longer you trade sideways, the bigger the breakout. Now we have the same situation here where we did break above a high. Okay, this is your high 1920, just like we did back here. Okay, where we broke above this major high roughly here. Now we have that same situation back here, right? This is your breakout. Okay, market moves up above that breakout, comes back down, looks for some buyers. Again, pretty decent size area of support, and find some buyers, immediately move up. Now, what's really nice about this chart is you really can't see it on the monthly chart, but you can see it really nicely on the weekly chart. We have a really nice bullish flag, and again, this bullish flag does suggest that the market is going to go up. Now, I'm going to highlight this real quick. So again, broken flag, and what we're going to do is we're going to see that this is where the market broke. This is where we have the confirmation that this flag is in fact broken, and now we should continue, technically speaking, we should continue to go much higher. How high are we going to go? Okay, well, we can kind of go back to this monthly chart, right, and kind of do the same thing here, right? So here's your flag, right? Let me take this magnet off. It's driving me crazy. So let's look at this flag here. Now this flag was almost a you could almost call this a false. It could have almost been a false breakdown, because again it fell below the flag, right? But again, with that said, you had the break, and anytime you have the break, then at that point what you want to do is, why isn't my chart working here? Here it is. So now what we do is we take the bottom where the rally began, roughly here, and we go up here. So we can just do this, right? Roughly 10:30. Okay. This is how much you want this market to move up, right? So if you're trading this flag and you're trading this breakout, this is your minimum you're looking for. So you're looking for a minimum of $1,500, 14.5 is really the move that you're looking for on this particular flag here. Okay, right? So now if we come to this area here, we're going to do the same thing. Where did the market start? You can say here, but really, this is where it really took off. This is where the rally really started. So that's what we're going to do. We're going to grab that area and we're going to put it here. Okay? And this is the minimum you're looking for that rally to go. So same thing. Just like we did here, all we did was take this minimum, where the rally started to where the rally ended before that flag, and all we did is place it here, right? And if you place it here, you're looking at $1,400. So again, this move here, this is the move that you were expecting, at least to a targeting 1450 here. Now the market kept going higher, good for the market, right? But ultimately, that's how you measure these flag breakouts. Okay, this is how you measure them. So again, same thing. We're going to take this. We're going to see where that rally began, see where the rally ended. You got the flag. We place this here, and now this is the minimum move that you're going to look for. You're going to look for a move of at least 2,600. Now you also have another really pretty move, which is called, you guys have heard me talk about this, a cup and handle, right? All right, so here's your cup, here's your handle. How do you measure your cup and handles? You go from here to the previous high, which is roughly here, right? So again, this is how you're going to measure. You're going to go and you're going to put this right here on this line, right? So you're looking for a move of at least 2,700. So again, on the cup and handle, you're looking for a move of 27. On the broken flag, you're looking for a move of at least 26. I think this market is easily going to go to 25, 2,600 in the near future. If you calculate inflation, you calculate everything else, I think this thing is going to go much, much higher. Right now, what you're seeing is that things are not really acting very rational. You see the Dow Jones trading at 34,000, right? The minimum move, although this is one thing that I did want to make clear also. Anytime you have a long-term high like this and you have a strong breakout, right? When I say strong breakout, I mean a breakout that contains itself, like this one where it kept going up. Typically, what you're going to do is you're going to take this price and you're going to double this. So 1,850 times 2, you're looking at 1,700. This market ended up going to 1,900. So again, the minimum move based on certain technicals here was 1,500. But ultimately, that breakout above this area here was a double, more than double. And that's what I expect for gold. I think the minimum you're going to see at 1920 times 2, you're going to see a $3,800 move here for gold. Probably within the next 2 to 3 years, who knows? And I think, I mean, we're definitely back into the bull market, right? So we got to let this bull market take its course, right? But based on a number of different factors, the minimum move that you're going to expect on this next rally is at least 25 to 2,600. Maybe continue to zigzag its way up to $335,000, $4,000. That's definitely my target here, because all we're doing is we're taking this number and we're multiplying it. Again, strong moves like this, if we continue to see big candles like this, you're definitely going to see $3,500, $3,800. Okay, very easy, again, being that this is your minimum, if we're calculating that breakout above this all-time high. Okay, let's look at silver. Okay, so silver, all right, silver also has a little bit of a flag here. Small flag, not the prettiest flag in the world, but also a flag. A breakout above silver, all we have to do is take this, measure it, and we're going to say that we're going to look at a minimum move of $40. Okay, next target for silver is going to be $50. Okay, and then once we go above $50, we're going to go to more than likely about $100. I calculated between 95 to 100. Although I do calculate for certain other factors and fundamentals, I do think that silver is going to go to 150. Minimum move. Okay, let's look at the Dow Jones. Okay, so we can see the Dow Jones again breaks through a high, not a very strong close above the high, right? This previous high of 29.6, not a very strong close above it, but a close above nonetheless. And then this is your nice big candle. I like this candle, but it looks like the Dow is probably going to take a breather here pretty soon. You can see that in previous times, the rally doesn't really it doesn't really rally for that many months. I think this is probably one of the longest rallies, and it rallied for 1, 2. Actually, this is the breakout. So 1, 2, 3, 4, 5, 6, 7, 8, 8 months, and right now we're at 1, 2, 3, 4, 5. 5 months where it looks like the Dow is going to end positive. But again, 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Again, it just doesn't ever rally that many months. Back here, you can count another 8 or 9. But again, typically 5 or 6 months is what you find from these rallies. Again, you can see here, I think we counted 9 months here, right? So again, it's probably going to run out of steam very soon. And when we talk about support, a huge area of support in the Dow, if we look at let's say a daily time frame, we can see that the Dow, really what you want to look at is you want to look at this trend line, right? Also, another thing that you want to keep a close eye on is this wedge. This is a wedge, and these wedges, they don't play out very, very, very nicely. At least not for this, not here. It looks like the Dow is probably gonna dip down very hard at one point or another, I guess, right? But I think in the meantime, you have to respect the fact that it's creating higher highs, right? So again, higher highs. These are established highs that I'm drawing. So as long as it continues to move up, find support, right? That's ultimately what you're looking for. So if you can continue this trend, hey, the trend is your friend, and you stay within this trend until you have at least 2 levels of support taken out. So the Dow Jones, be very careful if you break this level here around 32,000, because this is going to be one level. This is going to be a second level. This is going to be your third level. So again, right here, I mean, below 30, the Dow is in a lot of trouble, right? But yeah, the last thing I want to show you guys is the US dollar. The US dollar, look at this monthly chart. And if you've looked at my videos, you'll see that I've highlighted this diamond formation for you for quite some time, right? Just looks like the dollar is going to collapse here. I've shown you guys the diamond formation here plenty of times. I saw Ripple, it had a bullish diamond formation, meaning that the market, instead of going up, right, and then coming down on that diamond, the Ripple was backwards, right? So it came down, it built a diamond, then it went back up. These moves tend to happen just as fast as this. So we've already seen the US dollar, right? So let's say that this is your diamond, right? Not as pretty as I had before, right? But now what do you have, right? You have this level of resistance holding us down, right? So that's what's going to happen with the US dollar. The US dollar is going to go down. It's going to find resistance here, and it's going to create another low. Again, definition of a bear market. That's it. You have a confirmed bear market. Okay? You've broken all these levels, all these levels, all these levels. This is the last level to break. And once it breaks that level, I'm telling you, this thing is going to drop like a knife. And do not get under a falling knife. That's not going to be healthy for you. All right. Hope you guys like the analysis. Look for the lower low on the dollar here. Although we might have some volatility, look for that lower low. The second we move below 89, you really want to start paying attention to this, because again, you're already starting the sequence. Again, this is your high, this is another high, and again, this is your low, this is your low, and we should have another low. So eventually it is just going to drop. All right, guys, I hope you guys enjoyed the analysis. I'll see you guys next time.